Hey, welcome to the 40 Finance channel, everybody. Over the past week or so, I've been kind of kicking through some small cap stocks, just using a stock screener on Seeking Alpha, just to see what kind of potential deals there might be out there since the market has deflated so much over the past 12 months or so. And Yardeni actually came out with their latest report of valuations here at the beginning of 2023. And you can see on this last chart, this is forward PE ratios for S&P indexes. And if you just look at this from the broad view, so here's your S&P 500 large caps, then you have mid caps, and you can see, mid caps, I think, fairly obvious. They're below the trend line, maybe since 1999 in terms of forward PE. And if you get down to small caps, you're definitely below the trend line of the average forward PE that we've seen over the past 25 years or so. You'd probably have to go back to 08 or 09, or right here, of course, during the COVID crash, to find things cheaper, at least as a group, right? And that's the hard thing about this, is you got 600 small caps in here, and this is an average, and you don't know how some of the influences like the economy and interest rates would impact these forward PEs across 600 stocks. But needless to say, at least from the high level view, there might be some opportunity in small cap stocks. All right, so with that report in mind, I just put together a stock screener here in Seeking Alpha. You can see it's USA small caps. So market cap between 300 million and $2 billion. And we're just looking, at least in my world, I want to see growth at the top and bottom lines. That's just going to be the first filter I do so that I don't have to go through 515 names, right? So I'm going to go down here to this growth tab for revenue, and this is revenue looking forward, right? We always want to be looking ahead. And I'm just going to set this up for, let's just say, 5% and above, right, of revenue growth looking forward. And then on the EPS line, I want to also see 5% or above growth projected for the fiscal year ahead. And if we scroll back up to the top, you can see that lowers us to 299 stocks, so not super helpful there. So let's move this up to 10. And we'll make this 10 again, see what that does to the search results. Now we're down to 176. And you can see how all the names get output here. Now we're not going to go through 176 stocks today, but I did want to show you the process that I used to kind of uncover these names. And so I've picked out 5 or 6 stocks that to me sounded intriguing. And when I looked at them more deeply, there might be something there. But I do want to call out that with a stock screener, you're talking about 100% metrics-based search, right? So you don't always know the story behind the company. You don't know about their new initiatives or failed initiatives, things like that. This is barely scratching the surface. But from an informational perspective, I think the names that I put up here are at least worth looking at. If you're kind of combing through small cap stocks, maybe add them to your watch list. If you like to research like I do, maybe you'll like to go back and see some of their earnings reports to see, hey, what's behind these companies? Is there something here from an investment perspective? And if you're interested as we go along in this video, if you like what you see, all these screenshots here from Seeking Alpha, there is a special offer, 1 full year of Seeking Alpha Premium, only $99. That's over 50% off their standard subscription rate. My affiliate link is in the description if you're interested in supporting the channel. You also get a 7-day free trial on the front end, so definitely check it out if you like what you see here today. All right, first ticker on the board today is ACEL. That's Accel Entertainment. I had to look this one up. This is the largest terminal operator in the nation. They provide slot machines, redemption terminals, and amusements to bars, restaurants, convenience stores, truck stops, veteran establishments across the country. And you can see as it goes through here a kind of example of some of these games and stuff that they put into these bars and restaurants. All right, but let's get to the stock here. And if you look at the 52-week range, you're between 726 and 1404. Today you're at $8.77. You got a forward PE of 9.85 and you got an EPS forward of 86 cents. So one thing that was important for me as I went through all these names is just to make sure that we've got an EPS line, or at least a projected EPS line for 2023. Try to stick with companies that are at least making a profit at this time. And if we scroll down here, you get a nice little overview of some opinions on this one. As far as where it stands with Wall Street analysts, you got 3 strong buys and 1 regular buy. And then as far as the Seeking Alpha authors and the people that write about stocks on the site, you have 1 buy. When we go down here, and this is what I'm most important in, again, we're at a metrics-based search here. So we're taking out a lot of the name recognition and stuff that goes along with the stock, and we're just focusing on metrics to see if we're interested. And you see this revenue chart, this annual revenue chart, from 2017 to 2021, you have pretty good growth. No surprise, 2020 was down. And then you see the estimates for 22 and 23. It's a nice little ladder there, right? So good news on the revenue side. But how about EPS? And I'm going to switch this to an annual view. Note that it is the non-GAAP EPS. And you can see 2020, it looks like they landed at 7 cents. 2021, they're at 75 cents or so. And then 2022 estimate is 86, and the year after that is 88. If we look at valuation as a whole, you're going to get non-GAAP PE forward looking ahead, like we said, 985. The sector median is 13.6. And the 5-year average for forward PE with this ACEL, 38.82 is their average forward PE. Right now you're at 985. So there's a lot of green signals here, at least from a valuation standpoint. Again, with all of these stocks though, you need to go into an earnings report. I haven't done that yet. I'm just picking through names and showing you some metrics that are interesting. Go through an earnings report, dig deeper. Seeking Alpha has all the tools that you need to get this done. You can even go back to, let's see here, is it financials? Yeah, so you go to this, well, we're on financials tab, and then we go to transcripts and everything you need to know about earnings calls and earnings presentations is right here for you in Seeking Alpha. But at least with Accel Entertainment, the core metrics right now look pretty good. All right, next company on the board is ACMR, and that is ACM Research Incorporated. And this is semiconductor industry. Show you their website here. The industry's most advanced front-end wafer cleaning technology. All right, so I am not going to pretend to know what wafer cleaning technologies are out there. However, I think we all know that the semiconductor industry has been hit very, very hard right now, or at least I should say the stocks have been hit very hard. And no surprise, over the past year, this is stock that's dropped from $28 down to $9.84 or so, and the 52-week range puts it between $5.50 and $30, yet you do have an EPS of 75 cents and a forward PE of 1336. We go down to our charts, and annual revenue since 2017 has climbed from 36 million up to an estimated 377 million for this fiscal year ending in December. And then next year is expected to grow on top of that. How about earnings? We're going to annual. This is annual non-GAAP earnings. So 2021, they beat the estimate by about 5 cents. This year is expected to be 75 cents. I'm sure we'll get a report on all of our favorite stocks over the next 30 to 60 days. And then if you go for 23, they could be approaching $1. So those metrics alone make this one intriguing in my book. Double checking our valuation history. Again, 1336 on the forward non-GAAP PE. Their 5-year average is 50.82. So you're 73% off the the 5-year average, not the 50-year average. And you just kind of eyeball some of these other metrics, price to sales 1.57, looking ahead, it's been as high as 5.55, at least the trailing metric over the past 5 years. So you got some good stuff going on. Like the rest of the stocks here today, though, I will say you want to dig in, try to figure out, what is the story on these gigantic machines? What do they do? And what are the odds they're going to sell more of them here in 2023 and beyond, for that matter? All right, next up we have CLFD Clearfield Incorporated. These guys supply all kinds of equipment to the fiber optics industry. Cabinets, frames, panels, cassettes. I'm not sure what those do. You get the picture, though. And as we know, with fiber, continuing to expand, and there's so much of the United States that still has not really achieved a fiber network upgrade yet, this could be an interesting stock for the future. And if we go down here, you see our revenue annual. September of 2018, they're at $77.65 million. Looks like they got to $270 million in September. And then this year, potentially 386, and next year reaching close to the 500 million mark. We got our earnings per share, annual, and you see the growth, right? You see the growth, at least in the past. $1.47 in 2021. 355 and 22, and they're expected to grow from there. All right, on the valuation front, we got forward non-GAAP PE 2139, where you're at today. The 5-year average is 37, so you're 42% off what it is traded for in the past. And if we eyeball some of these numbers, looks like price to sales forward is a little bit higher, 3.89 compared to 3.22, but that's just me grabbing metrics. So once again, that's CLFD Clearfield Incorporated Fiber Optics Supply Company. Take a look at it if you're interested. All right, next stock on the board is XPEL 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 Incorporated. And this company makes paint protection products for automotive, watercraft, home, office, and commercial. And basically, it's a wrap over the paint on your car, which is the bulk of their examples here on the website. Obviously, it can be used for these other products as well. But this is a pretty interesting industry, if you ask me, when you start thinking about protective wraps and tinting wraps for certain products, especially as we know with the environment, sunlight and all those different things that may impact metals, glass, UV rays, etc. I thought this company was kind of interesting. I don't know much about the industry, but I'd have to guess that it's a growing industry with all the pollution and UV rays that are out there. If we look at the stock today, 67.56, it's actually been on a little bit of a bump here coming out of December. It looks like right before Christmas you were at 59. Heck, it's up 7% today now that I look at it to 67. The 52-week range is $40 and $87. The forward PE a little bit higher, 38.65. Let's look at our bar charts. Annual revenue, 2017, you had 67 million. This year, it could be 329. And next year, you could get up to 391 if they hit their projections. Earnings per share on an annual basis, non-GAAP. Looks like they did miss in 21, came in at 114 on a 123 estimate. However, this year's estimate, $1.63, is higher than last year. And then, of course, you look for that to compound over time. In 2023, you start to get into the $2 range if they hit their numbers. Now, on the valuation tab for this one, because they don't have an extended profit history, we don't get the 5-year average. Okay, so trailing 12 months on GAAP, right now they're at 44. 5-year average is 44.93. And that's about the only metric here that they qualified as far as going forward, right? We got some trailing metrics here. So if we look at our earnings estimates, so I'm going to switch over here. If when they come out with their annual report, their earnings in, I'm guessing January or February of this year, right? Late January, sometime in February. If they hit $1.63, that's your forward PE of 38.65. Okay, so that was a sort of like marginal, is that a good deal kind of line for them. But if we look at 2023, and if they stay on pace to hit $2.20, you get that PE under 30. There's cheaper companies out there, but again, for me, I thought that this one was a little intriguing just because of the industry that they're into. And if you were going to look into this more, I would say let's talk about this industry. Let's study it. How much growth is anticipated for these paint protection and UV protection products? All right, next company is NSSC, Napco Security Technologies. If we look at their website, you can see that they've got all sorts of security type connections, whether it's cameras, phone integration, door, remote unlocking of doors, things like that. It does look like they're a distributor. I'm not sure how many patents this company owns by themselves. But security is obviously a budding industry, and not just website security, but this whole industry of building security and mobile access is just getting started, right? And the expectation now is that you can access a lot of this stuff from your phone, particularly if you own a business. So my guesstimate is that this is the type of thing that's going to continue to grow, at least the industry as a whole, over the next several years. Taking a look at the stock today, 27.19, it looks like it hit a nice bump somewhere in September of 22. And if we look off to the side, the 52-week range was as low as 15.39, the high is 31.30. P ratio looking ahead, 36.94, right in line with the last company. And obviously, the question you got to ask yourself is, did you miss the bump here from 16 all the way up to 30? We're in small cap land right now. So I think the bigger question is, how much more growth do they have left? You might have missed this bump, but perhaps there's another if you can find more compelling evidence. Looks like Seeking Alpha's got one buy from their authors. Wall Street's got 4 strong buys and 1 buy. Let's take a look at our revenue charts. June 2018, you made $91 million in revenue. That's up to 143 past June 2022. If they hit their estimate, you go to 168 and then potentially 195 in 2024. So a decent chunk of growth there. How about our EPS? Again, this is the kind of bar charts that we're looking for, right? It may not go up to the moon tomorrow, but if you landed at 53 cents in 22, this year you're hoping to get to 74 cents by June, and then in June you start to look ahead to their 24 fiscal year at $1.11. That's pretty good growth if they can keep up this pace. All right, how about valuation? Non-GAAP forward 36.39, 5-year average right there at 36. So this one may not be on sale right now. And even on GAAP forward, it's about the same thing. Price to sales, 662. It's actually a little bit higher at $4.90. So now that I dig into this one a little bit, I would guess that you've got some time in terms of the pricing. It would be interesting to see what their next earnings call holds, which should provide some outlook for the rest of the year. And this might be one that at $27, who knows how much room is left to run. But if you watch it or add it to a watch list of some kind, and you see something come out, it could dip, right? And so once it gets close to that $20 mark, it might be worth exploring. All right, last one here today, Avid Technology. And this is the maker of professional video and audio editing equipment. And I think what caught my eye here is really just, the creator economy and where this world is going. And when you start to think about musicians and video and all that stuff, a lot more people are bringing in powerful equipment to their homes or small businesses to knock this stuff out themselves. And I kind of see that world continuing. Obviously, you could see some ebbs and flows, particularly in this economy with sales. But if we look at the stock, 27.92, you can see what's happened over the past year. It's only minus 4%, but you had a significant dip in May of 22. You were at $32 and it tanked to 21. It also tanked in September to 21. Today you're at 27. Forward PE of 1928 on an EPS of $1.44. If we go to our bar charts, I will call out too, from a Wall Street standpoint, you got 2 holds, 2 buys, and 2 strong buys. And let's see, annual revenue, not as impressive of the bar charts that we've seen. It looks like you were dipping down and you saw a low in December of 2020. And now it's kind of, simmering in the middle. But that 2023 estimate of 454, that would be impressive if they hit it. And I guess where my mind's going on some of this is how much did supply chain come into play, right, in their operations? You obviously need chips for these components that they make, and you probably had some supply constraints. Is 2023 a breakout year? It's hard to say by just scrolling through this single page. Let's take a look at earnings. So a good story here, if you think about this revenue, arguably flat, but look at this profitability. All right, they are doing a good job of making more money, more profits out of the same amount of revenue, and that's projected to grow. And this right here is probably why they showed up on my stock screener. All right, as far as valuations, if we go non-GAAP forward, you're at 1928. 5-year average, 25.83. So, arguably a 25% discount over the past 5 years in terms of averages. Price to sales forward, 291. That's actually higher than the 5-year average. So kind of a mixed bag. Granted, we didn't look through every single thing. But I would say with Avid, this is another one where we saw some bumps in the road, right, on the performance chart or the price chart. So again, if you follow this and you might see it take a dip, perhaps on a weaker than expected earnings call, that profitability bar graph, though, continues to go up. And anytime the earnings line keeps getting bigger, then the valuation keeps getting better. What I'd want to see, though, out of Avid, when I dug through their earnings report, I do want to see some semblance of hope that they can do more on the revenue, right? There wasn't a ton of growth there on the revenue, and I'd like to see the plan to continue to push that forward. All right, guys, so those are 6 small cap stocks that I found sort of intriguing while going through my stock screener on Seeking Alpha. Before you go, don't forget to check out that special offer for Seeking Alpha, $99 for 12 months, $99 total, 7-day free trial on top of that. My link's in the description. Hope everybody's doing well. We'll see you on the next video.